Welcome, everyone. Thanks so much for joining us. I'm Claire Jacobs, product marketing at Lithic, and I'm excited to kick off Strong webinar with two really thoughtful speakers and teams building the next generation of commercial lending and can speak to actually what it takes to build that. So before I hand it over to them to introduce themselves, I want to set the stage for why we're here. And that's that for the history of lending, the approval and actual access to cash has been two separate events. You get approved for a credit line, and then you either wait for an ACH to clear for funds to land in your bank account, or sometimes even a card to arrive in the mail. And that gap between a lender saying, yes, we will underwrite you, to when a borrower can actually spend is a moment of friction that we've kind of accepted as the cost of doing business in lending. But in 2026, it doesn't have to be this way. Cards are changing the distribution model for lending, and especially in a place where we can be issuing virtual cards instantly with specific guardrails. It also opens up a whole new universe around underwriting and customizability. So this infrastructure exists. Fundbox is live on it and can speak to that experience today of creating unique lending, underwriting, and fund access experiences. So without further ado, I'll send it over to our guests to introduce themselves. But if you have questions throughout the webinar, feel free to drop them in the chat and we'll connect with you to make sure those get answered. So Sarvesh, let's start with you. Welcome.
Thanks, Claire. Fundbox helps small businesses access capital through the tools they use day to day. We partner with these platforms to make access to financing simple, flexible, and seamlessly integrated into the user workflow.
Declan, over to you.
Hey, I'm Declan. I'm a product manager at Lithic. We're a modern card infrastructure provider. We issue debit cards, prepaid cards, credit cards, and provide services to support those kinds of programs.
Awesome. Let's start at a relatively high level, talking more about the products and why they matter. Loan to card is a relatively new innovation where you can send loan funds straight to a card. Sarvesh, tell me a little bit about why that innovation matters and how it helps overcome some of those gaps we talked about in the introduction.
Sure. So for SMBs, timing is the whole game. Small businesses go through cash flow cycles where they spend cash to get inventory and then sell the inventory to get the cash back. And when they want credit, the day they get approved, then they wait days to get the ACH to land into their bank account. So by the time the money comes for a lending product, the inventory order, the supplier payment, or the job that they need funding for has actually moved on. So even though we approve a customer for credit, the gap turns this approval less useful. So one of the things that is really useful with credit cards and virtual credit cards in particular is we can get the credit in hands of the customer right when they need it and right at the point of approval, compared to what we have in the traditional SMB lending space where it takes multiple days for the ACH to hit someone's bank account. So it just really, really helps to get credit right at the point when a customer needs it.
Okay. Now, Declan, from Lithic's side, supporting lending across multiple different card kinds and businesses, how do you think about cards as a vehicle for lending broadly and the innovation there? And a leading question, but why does the choice of issuer processor actually matter then in that light?
Yeah, so just piggybacking off of that, being able to have a credential that allows that loan to be spent right away is so helpful for borrowers. And being a modern card infrastructure provider, the tools that can be built on top of those payment credentials, like authorization rules or spend limits, that really allows the lender to maintain control and really understand how the borrowers are using that money and make better underwriting decisions.
That makes sense. So next question, I want to make this a little bit more concrete so that folks on the webinar can learn from what's been built here and see how it might apply to them. So Sarvesh, tell me from end to end, a business SMB's experience signing up with Fundbox, applying, getting underwritten, approved, and then being able to spend. Just walk me through what that experience should feel like for them. And then, Declan, I'll flip it to you to explain what's going on in the back end and under the hood for Lithic to enable that experience for Fundbox to then pass on to their SMB user. Sarvesh, I'll start with you.
For us, a business comes to our application page and fills in the application and they get decisions in minute. We do automated underwriting for the most part, and we underwrite on cash flow and the business bureau data. so that we can give real-time approvals. Upon getting an approval, instead of scheduling an ACH, as it happens with the regular disbursement, we issue a virtual MasterCard that is linked to the approved credit limit. Our SMB owners can add it to their wallet or input the card number anywhere they want to make a purchase, and each purchase becomes a net 30 term where they have a 30 days to pay us back. So repayment is by ACH, but the disbursement is through a credit card, and they can apply, approve, and spend entirely in the same session.
Okay, interesting. So you're completely eliminating the pain between ACH being approved and actual cash in hand for business. Surprisingly revolutionary for 2026. And I'm so glad we're able to alleviate that pain for small and medium-sized businesses. Okay, Declan, on the infrastructure side, what's going on under the hood on Lithic's side to actually power that experience on Fundbox's behalf?
So at Lithic, we built a modern credit ledger to sort of take care of everything after Fundbox, has approved and underwritten the customer. So Fundbox will come to us via their API integration and create a financial account for that business to track their spend. They can then issue multiple cards off of that financial account, which is great for SMBs that might have multiple employees, each one who might need their own card. And each of those cards, can be configured in different ways for the exact need of that SMB. So everything that Lithic offers in terms of our spend controls around what merchants and MCC codes they might be able to spend at, are able to be set at both a business level and at that underlying card level for ultimate control, so that Fundbox and their SMB know how that loan is being spent.
Yeah. Sometimes we think about configurability and spend guardrails only really as unique or innovative at the cardholder level, but we were all talking earlier. I think about how unique and helpful it is to have those controls both at the cardholder, SMB user in this case, and also at the Fundbox kind of program level. I'd love to hear from each of you why you think that makes added value for Fundbox in this particular program's context. Declan, let's start with you.
From Fundbox's perspective, they've underwritten their customers and they want to have really good controls, but also offering flexibility to their SMBs. And then from the SMB perspective, you want to be able to manage employee spend. You want to be able to manage how different cards can be spun up, and Lithic and Fundbox have enabled an experience where you can spin up a virtual credential to be spent on any kind of purchase that you're looking for.
And then from our side, like spend control really helps in risk mitigation. Like if we can figure out, or if I'm giving this card to somebody in, let's say, field services, and if I can restrict the spend to, let's say, to Home Depot or Walmart or so on, it really helps control risk, which means it can help us approve more customers in the end. So that control really becomes a big lever for us in terms of both underwriting and controlling risk.
That makes complete sense. If you can guardrail somebody's spend with a lot more customization and specificity, you might actually be able to safely underwrite someone that could get turned away at a lender with maybe more primitive controls. Interesting. Okay. Sarvesh, I'm curious on your take for this next question. But as we think more broadly about where lending via card rails is applicable, where are you seeing this be applicable outside of just the SMB lending world? Any particular verticals or use cases that you see as being a great adopter of this?
Anything where borrower needs credit right at the moment is better served by a card or by a card-like product. So anything around, think about BNPL, where somebody needs credit right at the point when they're spending, or early wage access, where when they need the money, they can't wait a few more days to get the credit, are all the use cases that can be solved by this product.
I think that's really insightful. And it's funny that you mentioned that. As you were talking, I'm thinking about the clients we serve as Lithic. And one that comes to mind is actually more so consumer oriented, serving kind of the constraints and payment timeline crunch around typically one of our biggest expenses through the month, which is rent payments, and being able to extend that payment to a property manager or whatnot via a card, and then our end card holder user, the consumer at the end of the day, is able to repay it in an installment way. So you think about how cards can actually just alleviate a lot of the pressure of time crunch expenses, whether you're an SMB, a commercial entity, or even a consumer, across a lot of the expenses that we owe. And that starts actually killing some of the more ineffective or even predatory means of lending. So it's very cool to see that manifest, like you're saying, across different industries and use cases. But let me get back on track here. One of the things I also wanted to ask you about as we're looking about how the program was made, beyond just the technical integration, tell me more about the operations side and partnerships. I'm sure while you've made it look easy in just 7 weeks, what were the buy versus build considerations you need to make, the different infrastructure or kind of regulatory bodies that you needed to partner with? Tell me about mapping that out entirely to stand up a program like this, because it's far from easy, and the considerations that you had to evaluate each of those needed partners.
Fundbox, I think as described before, provides working capital solutions. So one of our primary strengths is underwriting and risk management. So the thing that we brought into this partnership was more around our underwriting, which is which borrowers to approve, spending limits on what borrower spends, and setting up a risk or a capital structure in which those card receivables can be funded. Now, in order to make this happen, we needed a sponsor bank. It's the chartered bank that actually holds the network license and legally issues the card and carries the regulatory weight. In addition to that, we needed a card issuer processor, which in this case was Lithic. And Lithic ran all of the card machinery, introduced the virtual cards, authorizes each transaction, and runs the whole 9 yards that are needed for card management. And finally, we need a network, which it was MasterCard in this case. But as soon as we have those 4 main pillars, which is underwriting from our side, and then the sponsor bank, the issuer processor from Lithic, and the network, we were able to get all of them together and launch this product in about 7 weeks. So one of our primary decision points going into this product was to be able to launch this in a really short time, and speed to market was really, really important. And the way these 4 teams came together from 4 different institutions was really a testament on how fast this product development can be done and how fast a product could be launched.
I see. Okay. So that gives us a good overview on the infrastructure partners that are required to stand something up like this. Tell me a little bit more about embedded payments and why they're important for more of the distribution, and actually being able to reach the SMBs the way that you want to.
Absolutely. So one of the biggest things that we need is to reach small business owners right at the moment they need capital, and then use a product like one we have with Lithic to get the capital into their hands. So to enable that, we need to be embedded in the day-to-day systems that these businesses use, whether that's an accounting tool, whether it's a payment platform, or for lack of a better thing, a credit marketplace, and reach those SMBs right at the point they need the capital. Once we get there, we need to integrate with these payment partners in a way that is API driven and real time, and create an embedded application flow. And then finally, once we have the application from a customer, we need data for underwriting and real time decisions, which the customer sees through the platform using the data that they have already given the platform in the first place. So I think in addition to some of the cards and the payment structure, getting to the customers at the right point in time is super critical.
I think that's going to be insightful for those that are listening. And I want to steer the conversation still towards infrastructure, but Declan, give you an opportunity to brag a little bit about Lithic. Tell me more about what is possible here with Lithic and in this program's context that maybe wasn't possible with a legacy provider.
So I'll start with the technology, and then I'll move on to some of the process. Lithic is a modern card infrastructure provider, and it's an API platform built on top of our direct connections to the card networks. So we've taken these direct connections and we've built solutions that are ready to support a variety of use cases. For Fundbox, that means being able to open, line of credit accounts, being able to authorize from that balance, being able to generate multiple virtual cards that all can access that balance. And that's something that we have sort of right away, and we're able to get an API integration set up really quickly. On top of that, it's the process part, and there's the people that actually support the technology. And for that, it's about working with really awesome teams who are willing to dig in, understand the use case, banks that are looking at these sort of trends in where lending is going and are willing to dig in and support and stand something up to meet customers where they're at. And so it's kind of the technology and the people working together to make it happen fast.
I think you make a really good point there, which is it's not just the pure technical excellence, making a sophisticated API with strong documentation so that clients like a Fundbox can easily and quickly spin up a new program and launch it. But it's also managing operational complexity, which takes people know-how, process, and relationships. So it's balancing excellence on both the technical side as well as the operational side. So really both the fin and the tech in fintech. Awesome. Well, I want to bring it over, Sarvesh, to you. And with that in mind, around all the complexities to manage both technically and in all of the people that you need to work with to stand something up, what were some of the biggest misconceptions that you were able to foil as you all were standing up this program, or some of those learnings that you had while actually executing the program launch?
Absolutely. So before we went in, there was a general sense that, hey, it takes maybe like a quarter to get the credit card bin from your sponsor bank. It takes another few months to get the process, like integrate with the processor and so on, both of which were challenged as part of this process. And the fact that we could go end to end in 7 weeks, which means we got the bin with the sponsor bank, in addition to all of the integration with Lithic done, was one of the biggest assumptions that we challenged and came out like positive at the end.
I do love to hear it. Declan, on your side, being the expert on credit and generally these kinds of programs, what is it that you see folks and clients, whether they're prospects or actually Lithic clients, have misconceptions about when they're scoping building out a fully fledged credit program?
I think that there are a lot of things to think through in terms of offering a credit program up front. Like you mentioned sort of 30-day repayment. But I think sometimes customers will come and not have thought through the exact details of the credit and the repayment experience that they want to offer. So sometimes that back and forth can take a little bit, and that can extend the timeline. Because banks and lenders need to just have a full sense of the lending they're going to be doing. Fundbox came in with a really clear idea of what they wanted to offer, and that made it super easy for us to be able to set up their program and complete the implementation really, really quickly. And I think that is a testament to how they've thought about these things really well and understand the customers very well.
A sense of vision and maybe an opinionatedness about what it is they want to build, especially if time is going to be of the essence for success of a launch. But speaking of time being of the essence, I want to wrap us up and be mindful of time. That said, let's take a look to the future as we wrap up. Tell me a little bit more from each of you. What are the trends that you see in the lending, origination, underwriting, credit spaces as a whole, and what gets you excited about them?
Sure. In the SMB lending space, underwriting is moving from a static point-in-time decision-making, which used to be the case earlier, to dynamic spend limits, which is what this product enables. Now, we do that with real-time cash flow data, real-time bureau data, supported by a card product where you can actually adjust the spending limit in real time as you get the new data, not at just the point of origination. So I think we're really excited about doing that. That is all supported by the card product.
Yeah, I think just adding on to that, having the lender be able to also control everything about how the card is used really gives the most dynamic experience, as Sarvesh mentioned. And just generally how different fintech companies are specializing in different parts of the lending, card, payment infrastructure stack. I think we're just going to get better and better experiences for SMBs, for consumers, and how they're able to access capital, how they're able to understand spending, how they're able to control the ways that money moves. And so, yeah, as these companies develop and the technology gets better, sort of combine the different parts into the stack and into a solution is really just going to improve and be better and better.
All right. Well, that is my last question, Sarvesh. Declan, thank you so much for your time and insightful answers. We covered a lot of ground today, both at the macro level, visions, what's exciting for the future, and taking a little bit of a closer look at what is actually required to make such an innovative program possible. Again, we're so grateful for Fundbox as a client, Sarvesh, for you taking your time to give a little bit more clarity so that everybody can learn from the experience. If you have questions or further interest, again, please throw those notes into the comments and we'll be sure to follow up with you to make sure they get answered properly. Thank you so much for your time.